Hello, everybody, and welcome to our Tuesday self-directed IRA class. I have a very special speaker today with us, but unfortunately he isn't with us in person, but he did record a great class for us. So before I introduce him a little bit and share with you what we're going to be talking about today, I'm going to run through a couple of announcement slides. So thank you again for joining us. We know there's a lot of places you could be on your Tuesday around lunchtime, but thank you for spending it with us. If you are looking for more education, we have ample amounts of it for you, from classes to blogs to recorded webinars that we've done in the past. We have a great resource on our Education Center. In the Education Center, you can find all sorts of classes, just like the ones that you see here. So every Tuesday and Saturday, we have our IRA classes, our IRA webinars at 12 p.m. But we also have our virtual networking happy hour the fourth Wednesday at 6:30 if you're looking for more of a networking vibe. So not so much education, there's no presentation at that one, but we really try to foster and grow your network. So meeting new people, seeing who you can add to your tool belt, and finding resources so that you can keep doing deals and making more money. But if you have missed any of the classes, like I said, we do archive all of them, and they can be found on our YouTube and on our Facebook pages. So our self-directed IRA social is probably one of my favorite events that we do during the month. And this is our networking evening event that we do once a month in every different city. So in Houston, it's the first Tuesday, in Austin, the second Tuesday, and in Dallas, we do it on the third Tuesday of the month. We bring out a guest speaker, we pack the room, we do a little bit of network in the beginning and at the end. So it's a really good feel. If you've been to our $1 trillion investment mixer in the past, you're familiar with our setup, but this is a really great event to kind of get education and also network if you're looking to get out of your house and get back to those in-person events. It is a hybrid experience, so if you do want to join online, you can do so. And I really want to tell you guys about the one that we have coming up in April. I know that we just started March and I'm probably jumping the gun, but that's because I am so excited to announce the one that's in April, because it's our crypto social. So if you haven't heard, we will be starting to allow cryptocurrency investments here at Quest Trust Company. That is huge. If you didn't hear what I said, we are allowing cryptocurrency this year. So coming in April for that self-directed social for the Houston one, we are bringing out one of the expert speakers from ErisX who will be sharing information all about how you can get started doing crypto investing with your self-directed IRA. So that one is going to be huge. That's why I wanted to share that with you. Of course, be sure to register for March, come out, see what it's like, and get excited for that April one. So we have some promotions going on, but this one is one that we have going on throughout the year. So you can always refer a friend to Quest if you want to earn credits for yourself and also help them get started and earn some credits too. So with our referral program, if you share the information of self-directed IRAs and that person opens up an account with your name, they will get a credit and so will you. So it's a really great way to share the word about self-directed IRAs and also get a little bit of money for your account at the same time. So our Major League Investing event is actually coming up. The first one is starting this week in Houston, but we're going to be hosting a sports-themed case study event. So we have 4 experts in every city that will be coming out to share their version of what they think is a home run deal. And then with your help, the audience, you guys will vote for who has that hitting home run deal. So that one will be a really fun one. It will be March 3rd at 11:30 if you're in Houston, the 10th if you're in Austin, and the 17th for Dallas. This one is a lunch and learn, so it's not an evening event. And it will be on a Thursday, so do just keep that in mind. A lot of our stuff's on Tuesdays. This one's on a Thursday, so we would love to have you come out to our classrooms. This one is in person, so if you want to join in on the fun, unfortunately, you won't be able to join online, but that's where you can get your best networking done, is in person. So come on out and have some fun with us at Major League Investing. And this one is for our San Antonio clients or maybe our Austin clients that are looking to travel. We have heard your cries for an event out there, and we are here to deliver. We have all of our clients that are from the area that always tell us they really wish that we would come out there, put an event on in the area. So we're really excited to bring out a lunch and learn. It's going to be a basics class, all about how you can amplify your retirement with a self-directed IRA and tax-free real estate investing. This would actually be a great class if you have friends that are looking to get some more education or really want to get started. This is a great class. It's going to be, like I said, an introductory course, so really good one for those that are just looking to get some more information and maybe even get started. So that one's going to be March 24th from 11:30 a.m. to 1 p.m. And it's going to be right here, as you can see, at the Norris Conference Center. Registrations are free, but do be sure to register for this one. We are getting some catering done, so we would love to know how much food to provide for you. Okay, and then I'm almost done here. But this one is our biggest and best event, so we have saved it for last. And I'm sure that you've heard a lot of us talking about it because we are really getting excited. And that is the 3rd annual Quest Expo. We have actually started getting a lot of our speakers signed on, our panelists. We've gotten some sponsors and vendors, and everything is really, really coming together. And I'm starting to get very excited because I'm really seeing that big picture of the vision of this Quest Expo. And I can tell you, this is probably going to be the best year. We have new topics, new speakers. I know that we do a lot of webinars and classes, but we're going to be bringing out people that you have never seen before, people that are really going to be influential in helping you grow and build your wealth, not only for retirement, but for now as well. So be sure, get your tickets to that. You won't want to miss, networking and learning alongside 800 other investors. And I do think that we will have that many people there. We have in the past, and we're going to have just an even bigger and better event this year. So as I've been talking, a lot of links have been posted in the comments for you. We have another one of our IRA specialists online, and he'll be posting the link so that you can get your tickets to the Quest Expo. Right now, they are in early bird pricing, so it is the cheapest that they will be. They will go up in June, and I will tell you, the VIP always sells out early. So if you want to get the best seat in the house, get the preferred seating, a ticket to the Cowboy Casino night, the night before, you'll want to get that VIP ticket. But before I move to the next slide and introduce our speaker, I want to share our ambassador program as well. So if you want to get a free ticket to the Quest Expo, we have our ambassador program in place. What you have to do is send us an email to marketing@QuestTrust or QuestExpo@QuestTrust. Let us know that you want to be a part of that ambassador program, and we will give you a special code. If you sell 5 tickets with your special code, you will get a ticket for free. So that's a really great way to join in on the Quest Expo and also share the word with your friends to get them excited as well. So if you'd like to get in contact with us, this is how you can do so. You can either send us an email, give us a call, chat with us online with our live chat box that we have, or you can scan this QR code right here to schedule your one-on-one consultation right away. So that's all that I have for my slides. So I want to introduce our speaker for the class today. We have Matt Allen of NASB, and as I mentioned, this will be a recorded class. So if you do have questions for Matt, do be sure to save them till the end. But today, Matt is going to be sharing all about debt leveraged property and using non-recourse loans as you are investing with your self-directed IRA. We get questions about this all the time, so this is a really great class, and we love bringing Matt out to talk about this because what he loves to cover in this class are some of the advantages, how you can actually get a non-recourse loan, some of those guidelines and parameters, and why you would even need one. So without further ado, I'm going to bring up the pre-recorded class for today, and if you have questions, we will save those to the end, and we'll be sure to send them to him after. So here we go. Let's see. Do we have the video ready to go, guys? Give us 1 second. It may be coming up. There we go.
Hi, everyone. My name is Matt Allen. I'm with North American Savings Bank, and I want to thank Quest Trust for having me today to talk about how to leverage your self-directed retirement plans to purchase investment real estate. So today we're going to, talk about the ins and outs of investing with real estate, and then also how do you acquire a non-recourse loan to help leverage that purchase. So with that, I'm going to jump right in and start our presentation. So let me get my screen ready and show the PowerPoint presentation. And so, as I mentioned, I'm with North American Savings Bank. And we are based out of Kansas City, Missouri. We are a federal savings bank. We've been around since 1927. I've been with the bank since 2003. In 2005, we did launch this specific loan program for investors nationwide. As far as the presentation itself, we'll talk a little bit about the basics of self-directed investing, but primarily we're going to talk about the non-recourse loan aspect of it. That's the specific product that we do offer. So how to use debt financing to buy real estate with an IRA or a self-directed 401k plan. How do you obtain a non-recourse loan? And then what does a bank typically look for non-recourse? How is it different? What things should you be asking the sellers? Also your real estate agents, just how can you educate them on this specific type of transaction? And as I mentioned, NASB is a federally savings bank. We do offer conforming loans, conventional loans on a nationwide scale. You're probably familiar with LendingTree. The last 3 years, we've been top 2 lenders on LendingTree. We funded over $3 billion in residential loans last year. With all the refinances, it's been a very busy couple of years. Things have started to taper off as the rates have creeped up. But again, we still focus on a nationwide scale. And then we do have some niche products like this IRA non-recourse loan option that is a portfolio loan. So we are holding these within our own asset classes on our books, something that we would not sell in the secondary market. So before we get into this slide, the basics of self-directed investing. You can purchase anything except for collectibles and life insurance in a self-directed plan. And again, when I say self-directed, I'm encompassing all of self-directed IRAs, self-directed 401k plans, IRA LLCs, the different entity options that are available to you. So with that, life insurance and collectibles would include automobiles, wines, coins, things like that. So if you think about it, that really leaves your options open where a lot of investors are buying tax liens, mortgage notes. They are creating their own companies, starting their own banks with their self-directed retirement plans. There's some very unique opportunities out there investors are taking advantage of. I've heard of cattle being purchased. If you can think of a way to make money, and again, it's not one of the disqualified asset classes, then you could technically put it into your IRA account and try to make a greater rate of return than your typical stocks, bonds, and mutual funds that everyone is accustomed to. Now, with that, real estate is going to be one of your top 2 to 3 options that investors are using with a self-directed plan. Specifically single family homes. I know a lot of investors see this as an opportunity. There's a lot of uncertainty in the world right now, specifically, with the Ukraine-Russia tension. Where does the stock market go from here? It's it is stable current moment, but things could change dramatically. Real estate, it's a tangible asset. Historically, it's proven to be a very consistent asset class. So, if you're a real estate agent or you're just looking to diversify your portfolio plan, this is an excellent opportunity to not be so heavy on stocks, bonds, and mutual funds, which you leave yourself open to risk in times of uncertainty. So with that, with the different asset classes, you can look at all those different options with Quest. I'm sure they could discuss other options besides real estate investment property. But with this particular asset class, you really have three ways to purchase it within your retirement plan. One is outright. So you can purchase that, say, $100,000 single family home in Texas. You have $200,000 in your self-directed plan. You pay cash with it. Then your IRA owns that piece of real estate. There's no loan on it. All the cash flow you would receive would be pushed into that self-directed plan. And there's really, it's about as clean as it can get. There's no other buyers involved. It's just solely your retirement plan, again, owned free and clear. Second option, more of a tenant common option where let's say you have another self-directed IRA investor. You want to buy a $300,000 home, investment home, but you only have, let's say, $200,000 again in your retirement plan. So the two of you go in together, let's say take a 50% ownership. So each of your IRAs on 50% of that home, but you're paying cash. There's no loan on it. And then each of you would be entitled to 50% of any net profits ongoing for the duration of ownership with that single family home. Now there's really no limit to how many different investors you can have on title. So, you could break that down to 3-4 individuals, or retirement plans, but you would again have to divide title on a certain percentage, and that would remain the same as long as you own that piece of real estate. And then the third option, using leverage, and that's what we'll focus on, is let's say you had that same $300,000 purchase, but you don't have another investor to partner with, or you prefer to own it yourself. So you put $150,000 down, and then you obtain a $150,000 non-recourse loan for the remaining amount. Still gives the opportunity to buy that home. Again, with using leverage, there's not many asset classes and that you can use leverage to purchase assets to grow in that retirement plan. So this is a huge opportunity. It allows for quicker growth. You can buy, instead of just one piece of real estate, you could purchase multiple homes. So there's that opportunity. And then again, not putting all your eggs into one basket with one piece of real estate. You're able to leverage and still acquire that home. A non-recourse loan. So let me explain that in a little detail. So a non-recourse loan is one in which the lender has no recourse towards you personally. So if a home does go into foreclosure, you're not personally liable for that home. I guess any deficiencies that couldn't be acquired from the sale of the home in a foreclosure. So most loans that you're obtaining in your personal name are recourse, where the bank or the lender could go after your personal assets after the sale of the home, and let's say they're still $20,000 short, then they can again try to obtain that through your checking savings account or retirement plans, things like that. Where with a non-recourse loan, really the bank can only take back the collateral, the home itself, sell it, and if they can't at least break even with the sale of the home based on the loan amount, then they're out of luck. So that is the main difference. Most banks don't allow for non-recourse loans for this type of opportunity. And don't confuse this with some states are non-recourse, like California. So if you buy a home in your personal name, it's a non-recourse state. But the difference is those lenders in California aren't going to lend to entities such as a self-directed IRA. So we've touched on this a little bit, but why would you want to use debt financing within a self-directed plan? Well, all the net proceeds are going to go back into that IRA. Leveraging allows for larger gains. So as I mentioned, you can buy 2-3 homes in your self-directed retirement plan instead of just focusing on that one specific piece of real estate. And then diversification, that's hit on all the time. People, financial advisors recommend that you're not heavy on one particular stock or mutual funds only or bonds only. And this is a great way to diversify. And a lot of financial planners out there, advisors, aren't going to bring this up. So one reason they may not be, most likely aren't going to get paid on this transaction. So there's no financial gain for them. And then second reason, they may not know a lot about it, so they don't feel comfortable advising on it. So that's why you're here. You're here to learn, educate yourself on this, and see if it is something that you really would like to take advantage of. As far as who can obtain a non-recourse loan, it's really pretty simple. There's 3 things we're looking for this type of transaction. Because it's non-recourse, it is simplified in the fact that we aren't looking at your personal income, your employment. It's not a credit-driven decision. It's really based on 3 things, and that's 1, the collateral. We want to make sure the piece of real estate that you're acquiring is in rentable, livable condition. And then the second thing is your retirement funds. Do you have enough money for the down payment, closing costs, and then some reserves left in your account? Because if you are to have some deficiencies, maybe a tenant leaves and you have 2 to 3 months vacancy factor, you still have to make that payment, obviously, and you can't dip into your personal pocket for that. So it does have to come out of your retirement plan. We want to make sure that you've put yourself in a good position on the front end and do have reserves in your account. And then the third thing we're looking for is the cash flow. We want to make sure that the property you're acquiring has positive cash flow. We're looking at it from a debt service coverage ratio, or DSCR for short, and we'll dig into that a little bit later. But again, we want to know the home you're buying is going to generate positive cash flow, and you won't have a negative balance on a monthly basis, which would dip into your reserves. And I would say, the majority of these loans perform very well. One, you've got investors that are typically seasoned investors that have acquired rental homes before, and they understand the importance of positive cash flow. And when we launched this program back in 2005, how we got involved with it actually was one of our deposit bank customers here in Kansas City, Missouri, came to us and they wanted to buy 2 duplexes in Kansas City, but they only had 50% of the purchase price in their retirement plan. So they asked us if we would provide a non-recourse loan. So we reached out to their custodian, their IRA custodian, worked through the transaction, ended up funding on those 2 on those duplexes, and then we reached out to the self-directed community, asked them if there was really a need for this, and it seemed like there was. There was only hard money lenders, private lenders available. And if you've dealt with them in the past, you can have high fees, high rates. There's not a lot of flexibility there. So with that, we launched that program, and since 2005 have been the top nationwide lender for this program. But over time, the performance level has been very, very high, because we're basing this on your down payment, your reserves, et cetera. The only cases where we did see a little bit of a lull was before 2008, before the market crashed. Some people were buying on speculation, buying the home at the peak of the market and had no intent to rent them out. So they may have been cash flowing on paper, but they never had the intent to get a tenant in there. And so the values dropped, and then they were, in a predicament where they had to sell or lose the home. But since 2008, again, I don't want to hit on it too much, but you're going to see a very strong performance for these type of transactions. Again, since somebody's putting 30, 40% down, and specific for type of investment properties, the majority of what we see are single family homes on a nationwide basis. The new construction piece, we don't provide new construction loans. So you will have to find a lender that is willing to either fund the build themselves, or you would have to find a private lender in that specific market that would be interested in helping you with that piece. We could provide the end loan once it is 100% complete. So we can provide the permanent financing. 2 to 4 units, so duplex to a 4-unit, condos. We see condominiums, non-warrantable condos pop up occasionally, and we're okay with those if it makes sense. And then multifamily, 5+ units, don't see a ton of it, but there is an opportunity with 40% down as a minimum. And one thing to keep in mind, when you're making an offer in your retirement plan, everything needs to be in the name of the IRA. So Quest Trust Company for benefit of Matt Allen IRA would be one example. So it's important to make that offer in the name of the IRA, and you have your insurance set up as such. And then also realize that if you make the offer in your personal name, you're going to have to make an amendment at some point. So it's best to just make that offer on the front end. Some title companies will want to see that. Some will allow for an amendment to the contract, but as long as you own that property, it will be in the name of the IRA. And with the closing piece itself, this is probably the main difference that, when you're working on a transaction. Let's say you live in California and you're buying a property in Texas. The title company's gonna, we're gonna send the closing documents to the title company in Texas. They're going to send them, overnight them to you in California. You're gonna read and approve everything. Then you're gonna send them back to Quest Trust in Texas, where they will sign off on all the documents. And that's really the name we need, since it's in the name of an IRA. And once they sign them, it goes back to the title company and funds. So you can see there's 2-3 day window on top of what you would normally see if you're buying in your personal name. So keep that in mind when you're making an offer, that you do need to allow yourself. I would allow yourself an extra 3 to 5 days on top of the normal time frame in that specific market. 30 days is kind of the industry norm, but based on where appraisers are, they've been very busy. Other third parties that are involved with a real estate transaction, you just need to be aware and talk to your real estate agent about that. We do lend in all 50 states, but we typically have a hold on a few right now. New York, we rarely will lend in New York due to the stringent foreclosure laws. So if you're familiar with New York, judicial state where those foreclosures can linger for 2, 3, 4, 5, 6 years. In some cases we've had. So that's the main reason we typically avoid that state. But other than that, we will look at markets throughout the country. We typically avoid rural areas and like condo hotels, large acreage. The unique property types are the ones that we will look at closer or pass on. Reason for that is marketability. If we take those back in a foreclosure, it's going to be a lot harder for us to sell a 50-acre property with a single family home in a rural marketplace compared to a single family home in the Dallas, Texas community. So that's the reason. And we do only lend in the United States. We do get questions about, the off, Canada, Caribbean areas like that we don't get involved with. You can still buy real estate in those areas in your self-directed plan, but it'd be really hard to find debt financing. I'm not aware of any companies that will get involved. We did hit on this earlier already, but the time frame, 30 to 35 days. Everything else is typical. I'll say with the appraisal that we ordered, we do have to get rent comps. Now, as I mentioned earlier, we're going to base everything on the cash flow of the property. So we want to verify the going market rent. The property does not have to have a lease in place. So, you're buying that home in Dallas, going market rent's $2,000. The appraiser will perform a full appraisal, and then let's call it 1007 rent comparable schedule. And they'll provide 3 rent comps for that particular home. And we need to, hit that 2,000 number that, you projected, or your real estate agent is telling you is accurate when you apply for the loan. As far as type of loan programs that are available, we have a 10-year ARM, and then a 10, 15, or 20-year fixed option. They are principal and interest payments. We typically, limit it to a 20-year amortization. Just not only does that help you pay down the principal quicker, but it also, for the bank, being investment loans. If you have positive cash flow, you're going to pay that loan off quicker, get yourself in a better equity position. Current rates right now are in the mid 5s to high 5s. These rates are going to be higher than your conforming rates for conventional financing, due to the fact that they're non-recourse, and then they're for investment property. Big picture, they're not hard money rates. They're still very competitive, still allow you to get into some investment property at a decent price point. One other thing to mention, we do allow for cash out refinances. So some investors, let's say you purchased a home 5 years ago, and you paid, say, $300,000 for it. At the time, you weren't aware that you could get a loan, and now you've identified another property in your marketplace you want to purchase. So we could do a cash out refinance. So the loan proceeds would go back into your IRA, and then you could have those would be cash, and you could use those to help with the purchase of another transaction. So just keep that in mind. They're not for purchases only. Or maybe you acquired a hard money loan or a private or through a private lender at a higher rate. You could come to NASB and look for a rate term refinance also. We've already hit on this for the most part, what we're looking for property wise. Single family homes, PUDs, townhomes, duplexes, fourplexes. The next slide, more importantly, I mentioned farms, hotels, condo hotels, co-ops, timeshares, any of those that are unique. There's an opportunity for you, but a national lender is not going to get involved with those type of loans. So let's hit on the income requirements for rental property, what we are looking for. So this is the debt service coverage ratio that I mentioned earlier. For a single family home, we want to see that the net operating income exceeds the debt payments by at least 20%. And then when you get into a larger property type or by units, 2 to 4 units, we'd like to see at least 25% positive cash flow. And to explain this, let's give an example here of a $180,000 property, let's say in Texas. The going market rent is $1,600 a month. And then we've got our vacancy, our taxes, insurance, maintenance and repair, and then a management fee factor. So when you subtract out from the gross annual income all these expenses, you get an NOI, net operating income, of around $14,000. And then so if you're to, let's assume you put 40% down for a $108,000 loan size at 5.75 interest rate, your annual P&I is around $9,000 a year. So when we divide the NOI by the annual P&I, you get a 1.55 DSCR. Now, a debt service coverage ratio of 1.0 is the break-even mark. So in this example, 1.55 would mean it has a 55% positive cash flow. So this is well above what we would require. We'd like to see, as I mentioned earlier, a 20% for single family or a 1.2 debt service. So again, this scenario, as you're presenting it to us, looks good. And as long as the property appraises for what you're paying for it, and it's in good condition, and then the rent comps come back at least $1,600 a month, I would foresee this being something that we would lend on. Typical fees, we do have a 1% origination fee, and then our underwriting processing fees. Appraisal fees are going to run anywhere from 500 to, let's say, 700, depending on where you are in the market, what part of the country. We do escrow for taxes and insurance. So again, keep in mind, all your expenses have to come out of your self-directed plan. So that includes your taxes and your insurance. So we're going to collect for those monthly, and then we'll pay them as they come due, whether it's annually or biannually within the county for your taxes, and then your hazard insurance when it's due on an annual basis. Again, everything has to be paid from your account, and you need to keep that in mind when you're acquiring this piece of real estate. Documentation. So the easiest thing to do, if you're looking more of a pre-approval for a loan, I'd recommend that you reach out to NASB. We have a one-page form that we can send you, and we're really just looking for information on the property, taxes, insurance, purchase price, address, and then we have our loan committee look at it same day, give you a quick answer. Yeah, this one makes sense, or no, it doesn't. And here are the reasons why. So we try to keep it very simple on the front end to get you pre-qualified so you can make that offer. There's a loan application after that you would fill out. We need to verify your retirement account, your purchase contract, your ID, things like that. And then also your account statement from Quest, verifying the funds in your account. Our website is iralending.com. You can find more information about this type of loan there. And then you can also call us at the number below, or reach out via email at iralending.nasb.com. We do have a book, Leverage Your IRA, Maximize Your Profits with Real Estate. We have an e-version. So if you're on this call today, shoot us an email at that address there, and we'll send you a free e-copy. You can always acquire the hard copy version from our website, but it's the same version in PDF. And I think it's, in my opinion, it gives you a good foundation to learn about non-recourse financing, buying real estate in a self-directed IRA. What are the prohibited transactions? What you can do and can't do? It talks about UBIT, and then just also some good examples. There's a CPA that drafted a couple of chapters. So again, it's our gift to you for attending this presentation. So again, thank you for watching, and you can reach out at any time with any questions. And again, Very grateful for Quest for including us on this call. We always enjoy the opportunity to work with their customers or clients. So again, if there's anything we can do, please don't hesitate to reach out. Thank you.
All righty. Well, thank you so much to our presenter. I know he won't hear me tell him thank you, but that was a great presentation. I see we have a lot of questions over here. I'm going to go ahead and just post his contact information one more time here for you and bring it up. If you would like to get in contact with him, here you go. This is the email address and the website link. So this is how you can provide those questions to him so you can get those answered. If you want to get registered for any of our events, don't forget those are all online and the Quest Expo tickets are in the early bird pricing right now. So grab your tickets and we will see you at all of the upcoming events that we have coming up. Thank you so much.